Let's move on. The Canadian pension fund manager, Ontario Teachers, will be investing $350 million in Edelweiss alternate asset advisors. Venkat Ramaswamy is Vice Chairman and Executive Director at Edelweiss Group. He's joining us right now to take us through what this would mean. Venkat, thanks very much. Great to have you here on the show. Could you give us some basic details in terms of, this is investment with you or via you? Before we get to what kind of opportunities are there, in terms of fees, what would you make?
So, directly to economics. Hi. No, it is, this is basically a SMA or a special managed account where we will invest their capital into India private credit opportunities, both performing as well as distressed credit opportunities. So it is not an investment in EAAA, it is an investment that EAAA will manage for them.
What I said, it's an investment via you. I mean, in terms of you will manage. So then you will earn a fee. So that's why I started by asking, what will that fee be?
The fee structers are confidential. Alternative strategies, and that is what these strategies are called, where there is a 5-7 year time frame to make the investment and return the capital. Typical fee structures are between 1.5%, around 1.5% per annum, and with a carry, which comes out of the profits of the business, of between 10 to 20%. These are standard. I'm not saying that is what the fee structure that OTPP is paying.
Okay. No, that I think, yeah, sure. So that's broadly, I mean, you can sort of assume that to be what the arrangement here is, or maybe different, but that gives us a sense of how to think about this. Now, are there, so what kind of opportunities are you seeing? I mean, you said you have a 5 to 7 year window to invest this. Where are the big opportunities as you see?
So this partnership, as well as Edelweiss Alternatives focus, is around private credit opportunities in India. And private credit basically means investments in either corporates or in real estate projects or in distressed credit opportunities. This specific program, that relationship that has got started with OTPP, is primarily for corporate credit as well as distressed credit opportunities. And we, over the last, if you look at what has happened in India, especially over the last 2 years since ILFS happened, I think NBFCs as a sector have had a lot of challenges with investing in what one calls wholesale credit or corporate credit opportunities. And so therefore, the opportunity space for funds such as this has dramatically increased in size. And we are seeing a lot of appetite from global investors to invest in India credit, because India credit provides a stable and large investment opportunity for global investors at this point of time.
Venkat, but conversely, you could also say that after what happened with Franklin Templeton, should a teacher's pension fund be investing in, the Indian private credit, considering it's a risky investment, right?
Ma'am, that is, I think you have provided the reason why they should invest, ma'am. So a mutual fund or an NBFC is probably not the right structure for investments such as this. Unlevered and long-term capital is what these kind of credit opportunities need. And this is provided. That's why I started by saying this is 5 to 7 year capital. This is not capital that like in a mutual fund. These are not open-ended structures. So they can't ask for the money back day after tomorrow. It doesn't work that way. That's why they are called.
All right, just one more question then. What is the size of your EAAA fund right now? And is there any IRR that you
So EAAA currently is the largest alternative asset manager currently in India, and we will be order of magnitude $3.8 billion of assets under management. So you can say give or take 30,000 odd crores, 25,000 odd crores. No, 30,000 odd crores.
All right. Okay. Venkat, we'll leave it at that. Thanks so much for joining and speaking to CNBC TV18. Let's move on and cover some of the corporate stories. Vodafone Idea board